being a crazy man, I decide, instead of going to bed this late, after you've been at work for 14 hours, you decide you're going to go ahead and make another video, and it's about Ford. Is it time to buy Ford? Because this thing just dropped 10 freaking percent after hours. Now, if I wasn't at work my whole entire freaking life, I would have potentially picked up some Ford here after hours at down 10%. Gosh dang, the thing went down past 850. I pretty much was looking to buy it anything less than 850. So I'm excited to see if the market does this. I don't know how. I got to be at work early in the morning, so it already is early in the morning. But technically, I'm not going to get much sleep. I'm going to wake up. The market's going to be hopefully open shortly after I wake up. And I'll see if I can pick up some shares at a pretty decent price. Why? Because the yield. People may think it's absurd, but this dividend is a safe dividend for Ford right now, yielding a solid, going to be somewhere around 8% after this drop here. So very cool stuff. But overall, let's look at these earnings and see if Ford stock is worth picking up at this price. So there's some concerns here, right? Non-GAAP EPS of 12 cents, misses by 5 cents, and a GAAP EPS of negative 42 cents, misses by 37 cents. That's sucky. That's very sucky. Revenue, though, they did beat by 440 million, but it was down 5.2% year over year. That's sucky. Make me want to sucky. I don't know if I'm allowed to say that, but I'm tired, so I'm saying it. Yikes, that's an ugly looking earnings report. Let's dig a little bit deeper. So Ford falls sharply after setting 2020 EBIT and the guidance below expectations. The automaker guides for 2020 EBIT of $5.6 billion versus to $6.6 billion versus a 7.4 consensus. Yikes. That's really rough. That's rough. They're expecting a lot weaker guidance in terms of money they're bringing in, which is a concern. Financially, the company's 2019 performance was short of our original expectations, mostly because our operational execution, which we usually do well on, was not nearly good enough, says Jim Hackett. Well, Jim Hackett, you're a hack. How dare you not post a better earnings report? Come on, get this thing under control. I want to look at the slides they brought out, obviously featured here first by the Ford Mach-E. I want to find some good news about this. But first, we're going to look at what they have to show us. Again, they're always going to show you your basic nonsense at the start. So let's just look at this. So financial results. So for the fiscal year, flat at $2.8 billion from adjusted free cash flow. On the quarter, though, $0.5 billion, down 67% year over year. Yikes! But a cash balance of 22% or $22 billion and liquidity of $35 billion, which they can have $35 billion in cash safe if they need to. But off that cash balance, you can tell they're safe on the dividend. So adjusted EBIT down 67% for the full year. They were $6.4 billion, down 9%. Revenue, full year down 3%, $156 billion. For the quarter, $40 billion, down 5%. Adjusted EPS down 18 cents for the quarter, and fiscal year down 11 cents. Rough stuff. You don't like to see that. A decrease in profits, not what you look for. And the margin down quite a good bit as well. So everything's down there. Obviously, you don't like looking at down, but I'm not too scared about down for a company like Ford. It's a time in which the auto market's kind of struggling, and really that's where it goes. Every company's really struggling to grow sales pretty significantly. Overall, they did end up growing their automotive revenue, but they took more of a loss on their vehicles because of it. So think about it. I mean, Tesla's the only one that's getting away with anything right now, it seems like, in the auto market, and still having the stock go up. It's pretty crazy. So just some strategic focus, some highlights of the 2019 year for them. So in North America, they fortified franchise strengths with new products, 43 consecutive years of the F-Series sales leadership in the U.S., Best total pickup sales since 2005. Ford and Lincoln both ranked at top 5 in the J.D. Power 2019 U.S. Initial Quality Survey. Cool stuff for them. 5 Best in Segment Appeal Awards. Transit remained among America's best-selling bands. Good for them. In China, they announced 30-plus new products over 3 years. Aggressive launch cadence, including the new Ford Escape, Explorer, Mustang Mach-E, Mondeo, and Lincoln Corsair, Aviator, and Nautilus. In Europe, they announced comprehensive rollout of electric portfolio, 17 new hybrid and all-electric vehicles. Good for them. So a new alliance with Volkswagen drives scale across commercial vehicles. Medium pickups, Volkswagen MEB electric platform. Forming the new JV in India, and Mahindra providing complementary capabilities to strengthen position in India, restructuring Russia JV to focus on higher return commercial vehicle opportunities, and took equity positions in Rivian, which again trying to produce a all-electric vehicle with Rivian 2. From a global redesign, reduced management layers, and an increased spans of control globally. Cool for them. They also want to optimize their manufacturing footprint, reducing facilities, so they want to reduce some headcounts in Europe as well. Lower cost and asset-light footprint in South Africa, 40% reduction in total workforce in the past 3 years. And China, they built out an experienced local leadership team, began local production of the first Lincolns in China. Lincoln's doing okay in China. Okay, just okay. Not really okay. They're doing poorly. What can I say? Revealed the new Mustang Mach-E BEV SUV with all the new SUV electric archetypes and ability for over-the-air updates. Introduced largest public charging network in North America. Cool stuff. So they do have some stuff going on. So for Ford's name, they have the number 1 full-size pickup globally, the number 2 medium-sized pickup globally, the Ranger. The Transit's the number 1 cargo van globally. The Explorer is the number 1 America's all-time best-selling SUV for the Ford Explorer. Let's go. The Ford Mustang is the number 1 sports coupe globally. And the Bronco, which they decided not to... they obviously showed the nameplate instead of the car, because that's the thing. They reintroduced the iconic nameplate that they had prior. So that's worth seeing. Winning portfolio, obviously you see here. The things with the leaves are going to be a hybrid or electric offering. Some things that are out right now that they have details for. Some they don't. So upcoming, we will have, you can see down there they say which countries these are going to be in. So not yet in showroom is going to be ones that obviously don't necessarily exist right now. So those are going to be things that are coming out. The Mustang Mach-E, which they're waiting on. The Ford F-150, the electric version. Can't wait for that. The new Ford Bronco, and the small, rugged off-road utility, which is an unnamed thing right now. You have hybrids available in pretty much all of these vehicles right now, except for the Ford Super Duty. But again, this new electric Ford F-150 is huge for them as the number 1 selling truck. When it's electric, it still will probably be the number 1 selling truck for electric vehicles too. So besides that Tesla Cybertruck, which I'm buying, just saying. So from a cash flow perspective, pretty rough year for them. Q1 was good, but since then, rough stuff. Typically they have a bad Q2, Q3, so they were up actually in terms of that, but their Q4 this year was a lot worse than last year. From a cash balance and liquidity standpoint, pretty consistent overall. Nothing crazy going on with that chart. They're very liquid in their assets. Good stuff. From revenue and wholesale units, you see overall relatively flat, slight increases, but the adjusted EBIT down and the margin down as well. So Q4 results here, you see the different segments here Automotive Mobility, Ford Credit, Corporate Other, Company Adjusted EBIT, rough stuff. Interest on debt, not great. Special items, taxes and net income, which was a negative net income line. You don't like to see the negative net income line, but for the full year, the net income was freaking flat. So overall, nothing super concerning, just a very bad quarter. So from a quarter four perspective, you see obviously quite a bit of not much difference, to be fair. Overall, nothing crazy. Nothing crazy. We don't care much about the full year for that. That's not the numbers I'm looking for. Business unit results, obviously China, just rough stuff. You don't like to think about that. Ford Credit, which is cool. Cash flow, not super excited. So obviously cash balance here, a little bit lesser than what they had this time last year. Overall, good stuff there. So still $22 billion of cash. Debt has gone up a little bit, around $1 billion more in debt. So a little bit cash, less cash after you consider debt into it. Nothing crazy. Again, special items. Again, nothing super wild in special items. So for 2020, full year sales of the all-new Explorer will be interesting. Improved product mix and pricing from other new products. Improved fitness and benefits from global redesign. Non-repeat of UAW bonus. All these union workers makes it a little bit difficult for them sometimes. For headwinds, they have a back-end loading cadence of product launches, including the F-150 electric, cost of CO2 compliance, increased investments in mobility, lower EBT from Ford Credit, and higher effective tax rate. So that's what's kind of making it more difficult for them in the future. So as far as their guidance is concerned, for 2020, they're guiding adjusted free cash flow of 2.4 to 3.4 billion. So right, pretty much where they're at right now. Nothing crazy. Adjusted EBIT, obviously a lot lower. That's rough. Greater than 1.1 billion lower year over year. Don't like that. And the EPS standpoint, they appear to be presenting a little bit lower in terms of EPS as well. And where does that come in? Well, you look at it and you look, nothing's crazy. The dividends staying per quarter. Adjusted effective tax rate is going up, which is going to be a big portion of that. And that's really where you're going to see that increase, or really that decrease in EPS, is that tax rate going up. Our customers are informed and driving everything we do. 2019 was, and 2020 will continue to be, such robust launch years for us. We're bolstering our winning portfolio of vehicles based on what consumers want and need, reallocating capital to those high return growth opportunities, and carrying out changeovers. Second, we are determined to always get better, to persistently improve our fitness and our operational execution. We are looking ahead. We are optimistic. We have many opportunities to improve our overall operational execution, drive growth, and strengthen results, including cash flow, and in the process, earn the confidence of the stakeholders. Closing thoughts, nothing crazy. Key metrics. Let's go ahead and look at what we love looking at. That's right. From a net income perspective, don't like that chart. Really don't like that chart. But what else do we like to see? Well, could you show me the charts I want to see? They're not showing me the charts I want to see. That's okay. We'll find them elsewhere. But what is going on for Ford? Is it time to pick up Ford? Well, yes and no. I think it's not an awful time to, but I also don't think you're going to see much capital appreciation on this stock until at least 2021, when they start releasing their electric portfolio. That's when I think investors will start buying back into this stock. once they see how those perform, if they are successful, I think that's when investors might get into the stock again. I think right now it's a stock that's not super exciting, and people are really not investing in it, even though it is a solid dividend player. I'm a huge fan of the dividend they pay, and the yield is fantastic. It boosts my portfolio yield quite a bit. I might consider picking up some more Ford shares tomorrow if it still stays down 10%. I don't think it's going to stay down 10% for the full day. I think it's going to be bouncing somewhere around $8.50 per share for the day. I do think the market will have an impact on it, whether or not it's very far down or not. So if we have a very good market condition, I don't necessarily see the stock being down a solid 10% the whole day. But that is for you to decide whether you want to buy this. In my opinion, I think the numbers are okay. I'm not super upset with them, but I think 2021 is going to be a revolutionary year for Ford. So I think 2020 is going to be a not super exciting year, but 2021, keep an eye out, guys.